Welcome to Taking Stock, your weekly dose of all the action on Dalal Street, and what an action-packed week it was. Great week, great month, great series. We had nothing to complain about, Anuj, and in fact, a record-breaking week on all aspects.
On all aspects, Sonia, and all-time high turnover. We had 10 lakh crores in yesterday's trade when the market hit all-time highs. But I think for me, the October series has just been a big lesson for a lot of people, that this market is a big bull market, and if you get a 4 to 5% correction, that's godsend. Just go out and buy that. I mean, I'm not saying that wait for 4 to 5% correction to buy, because quite clearly that is something that is happening, after 3 or 4 months gap. Intermittently, you're only getting 0.5% correction, and even that are being lapped up. So right now, you have to buy, you have to be in this market. Of course, you have to be careful about the kind of stocks you're buying. You have to stick with the leaders. Bank Nifty was up 11% this series. So there would be periodic profit booking in some of these names. But at the end of the day, the screen is telling us that you have to just go out and buy. On Friday, of course, the Bank of Japan move was the big welcome that the market needed. Not that the market required any of that outside help. The market was moving on its own. But even the global markets have now, I think, fallen in place. It looked like there was a bit of a global scare. That's also passed, and the way commodity prices are falling, it's telling you that it's all in for equities right now.
No, clearly. I mean, last week was the return of global risk on. You saw it not just with the Japanese monetary stimulus, but also with the US Q3 GDP data, which was really strong. So all of that put together was a very good cocktail for our markets. But joining us on the show today, we have two guests, Sandeep Shah of Motilal Oswal and Jay Bala of CashTheChaos.com. Join in to give us their view. Bala, let me start off with you first. Great week for traders, great series as well, although the initial part was a bit choppy. But what's the sense you're getting about how the November series will shape up?
Good to be on the show, Sonia. And I've been working on the thesis that this market is going to face some resistance in the range of 8286 and 8355. The markets have got into the range, and they've actually closed into that range. So Monday is going to be a pretty crucial day for me, at least to that thesis that I'm working with. So I think the volatility that we experienced in October is going to continue to first half of November. So we could see the market, taper off from these highs and continue the volatility that we saw in October to the first half. And then, we're going to probably see a much better second half of November and December. That's the thesis I'm working at this point in time.
Okay, that's interesting, Jay. So in that case, at what point would you initiate a fresh long position on the Nifty, and what would be your December end target for the Nifty then?
Yeah, see, markets are ultimate boss, and there's no argument with that. If the market were to exceed convincingly about 8355, I think I'll have to revisit this thesis, and I'll probably look at the market hitting 8600, without any significant correction. You might have 1 or 2 blips on a couple of sessions. But the thesis that I'm working with is that the market is going to revisit the 7724 levels that we saw in October, and that will be an interesting opportunity for us to get longs. But even then, there's going to be stock-specific action in the market. And what will be the direction of the market in the short term? I think the stocks that have their names Bharat, they're going to do quite well. Whether or not it's Swachh Bharat, it's going to be the theme is going to be switch to Bharat stocks.
Okay, that's something I haven't heard. Switch to Bharat stocks. But so let's talk about some of those stocks then, Bala. You had big heavyweights like L&T, SBI, HDFC all gain last week. What would your top picks be now?
See, in the frontline stocks, I don't have any specific, screaming buy at this point in time. Although I like Ultratech at this point in time. I am expecting Ultratech to scale new 52-week highs. So as I spoke about the Bharat stocks, in the Bharat stocks, I like BHEL at this point in time. I think it's set to clock fresh highs about 290. So and once again, Larsen, although the upside is not high, I think that is also likely to scale 1850, 1900 in the short term. So I like these 3 stocks from the frontline name. Among the other stocks which are not in the frontline stocks, I think BEML has fantastic potential from current levels. I think BEML is set to scale 900 in the short to medium term. So that gives an excellent risk reward from Friday's close. So these are the stocks I'm looking at this point in time.
Okay, so Jay, I'm just giving you 4 or 5 names. If you could tell me what would be the market leader, or if it would be something else. You know, you had Reliance, which participated in the last couple of days. You had Infosys and TCS that started to participate last week. And of course, you spoke about Larsen already, and Tata Steel also showed signs of move up. From the index stocks, what pocket do you expect would take leadership?
See, Reliance has been a bit of a disappointment. I had expected the stock to stay a little more stronger than what it has actually done in terms of price action. So I would say it's a bit of a disappointment. So I don't think it's going to lead the market at this point in time. But Tata Steel seems to be putting in some sort of a base, and I think it could very well go back to the 52-week highs around 530 odd levels that it saw a few months ago. So that could probably be leading the market. And in terms of what was the other stock that we spoke about?
We spoke about TCS and Infosys.
Yeah. See, we spoke about Infosys being a market leader in the month of August. It was trading at about 3,600, 3,700, and we saw 1,300 coming through in the month of August itself. I think Infosys still has got some steam left. Although I would say this is not a point where one should create fresh longs. But I'm a bit reluctant to talk about TCS. I think the structure for the stock isn't that encouraging. But I think Infosys would be the leader. Infosys and Tata Steel would be the leader from the frontline stocks.
Okay. We also saw in the last week, Bala, that a lot of the infrastructure, highly leveraged names gained quite a bit. Nagarjan Construction was up 30%, GVK Power, IVRCL were up 20%. Any picks in that lot that you'd want to trade just for next week?
Interestingly, Sonia, I have a couple of picks in the infrastructure names. Now, that is, of course, Reliance Industrial Infrastructure seems to be, coming up with a very interesting, setup in the short to medium term. I think the stock is set to scale about 700 in the short to medium term. And we saw one of those, small cap infrastructure stocks, Ramki Infra, breakout on Thursday. That has got a terrific structure. I think that is set to scale about 80 to 85 from current levels. So interestingly, I have 2 picks in the infrastructure space.
Okay, Jay, you track all these global assets also quite closely. First, your call on dollar, and second, your call on commodities.
Yeah, I think the dollar index is going to be much, much stronger than what people are anticipating. We had spoken about the dollar index very long term in 2010, where I had mentioned that dollar index is set to scale 98 in the very long term. I think we look at from a 1 year to 1.5 years time frame. I think we are minimum seeing at least 92 to 94 for the dollar index. So that's going to put a lot of pressure on the Indian rupee too. Let's come to that later. But when it comes to commodities, I think the gold is a very important asset at this point in time. It's set to clock a short-term low at this point in time. I think 1155 will be a short-term important significant support for gold. From there on, I think we're going to see a short-term rally. Although I'm bearish on gold for the medium to long term. I think it's going to go down to 3 digits, say something like 6 to 1 year down the line. I'm talking about dollar-denominated gold, not the M6 gold.
Okay, there was indeed a big sell-off on gold on Friday as well. But thanks, Bala, for joining us. You have a good weekend. We'll see you again later on. That's the word coming in from the technical expert. But we'll do one thing. We'll take a break. When we come back from the break, Sandeep Shah, Motilal Oswal will be with us. But in the meantime, let's listen in to some important market opinion that we got after the markets hit an all-time high last week.
India has distanced itself from many other emerging markets in terms of the improvement in the macroeconomic situation. If you look at the fiscal deficit numbers, give or take, I think the government will be able to manage the 4.1% number for this year. And I think over the next 2 years, as we see further reforms in terms of direct cash transfer schemes being implemented, GST coming in place by April 16, I am reasonably confident that you could see fiscal deficit declining to maybe 3.5% by the fiscal 2017 year. So again, a big improvement as far as the fiscal situation is concerned.
India is a story of improving fundamentals against a backdrop within the BRICS. People are more interested in the Indian story, and I do expect India to continue to receive good flows. But it's also very important to look at what's happening to deposit rates in India today. Deposit rates are coming down. That's important for the equity market because high fixed deposit rates were strong competition for equity mutual funds. And we've also seen a lot of redemption of equity-related insurance products in the last couple of years. These headwinds for the market are coming to the end and turning into tailwinds. So I actually think it's going to be Indian savings that are driving this market higher. And foreigners are going to remain very interested in it because it does have some very good relative fundamentals.
I'm not surprised. I mean, it had to happen, and we are going to see many more new highs. It's just that too many things had happened positively, whether it is a oil decline or a deregulation of diesel, and now I think Maruti's dividend policy change. I think that has added new fire to all the auto stock, particularly Maruti itself. So I think these small things, they add up, and in any case, I think foreigners were selling, that has stopped. So everything is coming together to take the market to new high. But I think let's not believe that this is the first new high. I think we are going to see many new highs in the days to come.